Hello, Bay Area. Welcome to the Real Estate and Wealth Show. I'm Nagaraj Annaya, your trusted Bay Area realtor, investor, and entrepreneur, bringing you the latest insights into real estate, finance, and smart investing. Every episode, we break down market trends, tax saving strategies, and expert financial moves to help you build wealth. This real estate is all about build wealth. I'm joined by today a brilliant mind who know the numbers inside, and our own Tony from CPA Dude. Hello, Tony. Welcome to the show.
Hey, Nagaraj, thanks for having me again.
Yeah, Tony. Listeners, if you have any questions on the Bay Area real estate or any questions on the tax savings, right now is all about tax, right? It's because tax days are coming, tax due dates are coming in. And if you have any questions, do give us a call. Our studio line numbers are 877 Bolly 92. I'm with a Tony, and we're going to discuss all about tax saving strategies and other stuff. Tony, let's talk about what are the key tax filing deadlines by 2024.
Great question here, Nagaraj. Yeah, so one's really imminent upon us. It's going to be generally it's March 15th, but March 15th is actually a weekend, so it's going to be March 17th. And
Okay.
yeah, if you so they give you a little bit extra dates this year, but the big part is your S corporations and if you have LLCs with two or more members inside of it. So you got to make sure you file the extension by that time or just file the return. And the biggest part, the penalties are very large. The penalties is $235 per partner per month. So
Okay.
if you have two partners in it and you're late by 1 month, it's gonna be $470 a month, and they'll go all the way up to 12 months. So if you have three, four, five partners, the penalties get really bad. And then on top of it, you have interest. So the big part is make sure you file your extension by March 17th, St. Patrick's Day.
Yeah, listeners, if you're thinking about a tax savings and if you're thinking about anything on the tax related or anything on the Bay Area real estate, this is the show. You should never miss about it. Myself, Realtor Nagaraj Annaya, and I'm talking to CPA Dude. If you have any questions on today's tax related or anything on the Bay Area real estate, our studio line numbers are 877-265-5992, 877-265-5992. So myself, Realtor Nagaraj Annayan, talking to CPA Dude, we are live. We are live today. So we are talking about the tax filing due dates, right? But a lot of people might not even be prepared. How do you approach for extensions, right? Like, is it really you need to be panicking on these extensions? What are the misconceptions about it?
Yeah, so extensions, the biggest misconception is that an extension allows you for more time to pay, but that is not the case. You only get more time to file the information. So for the March 17th deadline, you can make sure you go in, extend it, and have the confirmation. For your personal taxes, though, April 15th is the day you still have to pay no matter what. So
Yeah.
an extension only means more time to find the information, get the documents, get the K1s. It'll give you 6 months though. So for your S Corp and partnership returns, they'll give you 6 months until September 15th, your personal returns, October 15th. And so if you're an investor, a lot of K1s come out during the summer. But yeah, the biggest thing is make sure you make a payment by April 15th. One big part though is you don't know how much to pay. And for us to help out our clients when we do this is we do a thing called a tax projection for our clients. And that simply is taking in all the information and data that we do have at hand, seeing if there's a little bit extra that we're anticipating that we'll get in the summer,
Yeah.
adding in a buffer about 10%, and then putting in that payment. And the reason why you want to almost overpay on purpose by April 15th is if you underpay, there's two penalties. You're gonna have a failure to pay, you're gonna have a little bit of penalty there, and they'll assess interest. So you just want to make sure you do a good faith attempt to put in as much as you can by April 15th. Make the payment, you can still extend it. Number two misconception about extensions is they cost money. They're
Correct.
completely free. Like
Yeah.
the IRS doesn't charge for it. Our firm doesn't charge for extensions. It's just part of the tax return process, just an extra form that you have to file out. So there's no fees for an extension. So that's another common misconception about how to extend a tax return.
Yeah, don't get panicked, listeners. Don't get panicked. If I know most of them are not ready sometimes, maybe they need an extra money or extra time to prepare for the tax related. Take some time. You can file for an extension, as Tony has mentioned, but you can always call him. But today we are live on a Bali 92.3. Our studio line numbers are 877-265-5992. Or it's easy to do number is 877 Bali 92, 877 Bali 92. We are giving a lot of inputs how to save your taxes and what are the ways. So in this, Tony, since I'm talking about aggressive things, right? Like, what should be people be careful when it comes to aggressive write-offs? There are a lot of people things like write-offs are easy, but what do you think about aggressive way? What not to do?
Yeah, what not to do and what not to write off. So yeah, a lot of people, the biggest things that I see that are not write-offs
Mhm.
that they think they are always going to be ones that are just not related to their business or to their rental property at all. So our rule of thumb and guiding principle and what the IRS states
Mhm.
is the deduction ordinary, and number two, is it necessary? So if it's not ordinary and necessary for your business or your real estate, do
Mhm.
not write it off. One big thing that we see a ton is personal expenses.
Sure.
Anything that is personal expenses is going to be disallowed. So one part, people say, hey, like so some of our realtor folks, they're like, hey, can I write off the Louis Vuitton handbag? I'm like, I don't think so. Like, it's not ordinary and it's not necessary to sell a home. Yes, does it give that perception? Yes, but that doesn't count. Another
Let's
thing
take
is,
one call. Yeah.
oh yes.
Welcome to the show. Myself, Realtor Nagraj. Hello.
Hi, Naga. This is Puneet.
Yeah. Hi, Puneet. Please go ahead with your question, Puneet.
So my question is, I am a Indian migrant here on H1B, and for last year, my child lived with me for 180 days, so not more than 183 days.
Mhm.
Am I still applicable for ITIN and child deductions?
Yeah,
Tony, repeat the question. Yeah.
yeah, to repeat the question, it was you're here for the full year, but your spouse was only here for 180 days. Can you file for an ITIN?
Puneet, can you hear the question?
Sorry, can you repeat?
Can you
No,
repeat?
can you repeat?
Can you repeat the question once again, Puneet? Like,
So my child does not have a ITIN right now. Can I
okay.
apply for ITIN and claim for child tax deduction?
Yeah. His son doesn't have the I-10, it seems. Can he apply for an I-10?
Yeah, you can apply for an ITIN, and then on your tax return, you can say applied for in lieu of the social security number.
Yeah, but his duration of stay was less than 180 days.
Less than 180 days? Yeah, that one, we might have to do a deeper dive onto it. Feel free to contact us to the cpadude.com, and then we can identify, where the requirements for it. And then, because there's also going to be a support test that we'll have to determine too.
But he should be able to, but for that to get a confirmation, better to reach out so that you can
Yeah.
do an investigation on that. Puneet, do you have any follow-up question on that,
Sure.
Puneet?
Thank you.
Yeah,
No,
Puneet,
that's it. Thank
yeah,
you.
do reach out to them later. So, listeners, we are live on a Bali 92.3. Myself, Realtor Nagaraj and I'm talking to the CPA dude, Tony, and we're discussing about a lot of tax saving strategy, especially being this year we are closer to your taxes. If you have any questions, our studio line numbers are 877 Bali 92. Easy to remember, 877 Bali 92. So one more important thing, right? Like we were talking about aggressive write-offs and other stuffs. Right. But being in a Bay Area, a lot of high income RSUs are there, correct? What are
Mhm.
the ways to save that? Like, because especially since you're getting so much RSUs, so much income, what are the ways we can save the high income taxes we get most probably, Tony?
Yeah, the high W-2, the tax code is not written for W-2 folks, but we got a few strategies up our sleeves that we can help with. One big part for RSUs is to possibly use this strategy. It's called a long short strategy. What this does in a nutshell is it creates capital losses. So when you sell your RSUs, you won't pay capital gains and you'll have that money there. So generally speaking, when you sell your RSUs, you're going to pick up a capital gain and then you're going to have to pay tax on it. But with
Correct.
the long short strategy, you're able to create capital losses to not pay capital gains. So that will be great. And now that you have a lot of money from your RSUs for down payments,
Mhm.
then using a short-term rental loophole, so buying an Airbnb, will be great, or building an ADU or doing a house hack
Uh-huh.
for an Airbnb will be really good to reduce your W-2 income. So that's one of the best strategies for high earning W-2, and tons of our clients use this strategy all the time.
Mhm.
Finding good local parts here, Nagaraj, you can help them find a beautiful home here that they can house hack or has an ADU potential to build on. That's a great way for you to reduce taxes as a W-2 earner.
I think let's basically touch. Most of the people doesn't know what is house hack. House hack is like basically you're staying in one property and maybe a duplex kinds, right, where you're staying and you're renting out the other property, right, Tony?
Yeah, yeah. You can like you said, duplex. You can just have a in-law unit, so you can have the main house, a small section of the house is carved out for the in-law unit. Or we have some clients where it's like a four-bedroom house. They'll just house hack half of it,
Yeah.
and they'll live two other random people have it. The other room they stay for themselves. The other one's like his office. So
Yeah.
it can just be a single family home is completely fine. It doesn't have to have a special duplex. I don't want to make it more complicated. Like as it can be as basic as a single family home, but you're right, Nagaraj. It's just, hey, you're using a portion of your house as a rental property, as put on Airbnb or VRBO or midterm rentals. That way you can unlock a lot of tax savings through real estate.
Yeah, I think that's the real estate beauty, right, Tony? Like always, right? The way you use it, because a lot of people might be not aware how to use it, because a lot of people didn't even know what is house hack until now. Correct.
Mm,
They
mhm.
always think the house, it's how buying a house itself is a burden, but there's in a smart way how you can use it around the strategy that makes a difference always. Now, coming to repeating to your one thing is short and long term, right? Basically, when you're selling the stocks, like basically you're trying to say whenever they sell a stock, sell the short term gains and the long term gains, so that way your profits are less. Is that the way?
Yeah, that's the 101 method, right? So if you accrue a ton of capital losses, they'll offset capital gains. However, there's another strategy that a few of our clients are using right now to further generate additional capital losses by using a leveraged margin account, but still maintain their initial investment. So they're making money, but they're losing money on paper. The beauty of it is that now that the paper losses, like monopoly money, it can offset the capital gains they sell their RSUs or their stocks on. So it's a really big new strategy to help unlock a ton in taxes and just get your money out of your company positions and your RSUs and diversify.
Yeah, I think see, it's a lot of people gets panicked on that, like especially. But if you're using it in a smart way, talking to people like you, they can always can double on their investments or like basically ways to find out this tax saving, especially for the tech folks, right? Because one more thing is like this week we saw that a lot of stocks went down, right? Like and they always have the question: should a RSU holder sell immediately, wait, or diversify their investments? What do you want to suggest on these cases? Because 20% drop,
Yeah.
how do they go about it?
Yeah, it's really up to the person, but I mean, generally, right now, in my personal opinion, is the market's just scared.
Yeah,
People are just reacting emotionally. If
yeah,
you just ride out the wave, it's gonna bounce back 40%, right? 20% drop, 20% upswing, 40% through. So just hold strong. Good old Uncle Warren Buffett always says just dollar cost average it out, right? So I wouldn't panic if I were you.
yeah. Well said. Listeners, don't go anywhere. We'll be back quick. We'll back. If you want to have any questions, do call us. Our studio line numbers are 877-265-5992. We'll be just back with this after this ad.
Bay Area home buyers and sellers, listen up. Why work with multiple people when you can get everything in one place? Meet Nagaraj Anaya, the top realtor and mortgage expert, your one-stop solution for buying, selling, and financing your home. Want the best deal when buying, the highest return when selling, the lowest mortgage rates? Nagaraj Anaya has you covered. Don't take risks with your biggest investment. Call Nagaraj Anaya at 858-880-4577 for a free consultation today.
Hello, welcome back to the show. Myself, Realtor Nagaraj Annaiah, and I'm talking to Tony from CPA Dude. If you have any questions on the real estate, you can give us a or tax related, because it's being a tax season. Anything on the tax related. If you're a high earner and I would like to understand what are the ways you can save it. Our studio line numbers are 877-265-5992, 877 Bali 92. Easy to remember, 877 Bali 92. Now let's talk about our new Trump tax law changes and future tax policies. What do you think? What do you have in that?
Oh, there's a ton right now. So tax laws are set to expire, shortly here in the next year. And there's a couple tax strategies that I'm really eyeing down that'd be really useful for the listeners here. The first one is going to be the state and local tax cap. So the SALT cap is what they call it. What this is right now, your property taxes plus your income taxes, the government is only allowing you to write off the first $10,000.
Hmm.
And easily we pay more than $10,000 in property taxes in the Bay Area. And on top of that, we still have income taxes well over 10,000. So that's 20,000. So
Okay.
what the key part is there's many flavors and they're looking to either one, double it to 20,000, possibly go to 30,000 is another flavor I've seen, or they'll eliminate it completely. So this was going to be massive because an extra $10,000, say at 30% rate, that's an extra $3,000 instantly back in your pocket just because of how the laws are written.
Yeah.
So I'm really excited for that because anyone in California here, we pay so much in state and
Yeah.
local income tax, property tax.
Correct. Correct.
That's one of my favorite ones there. The second one that could be huge for real estate investors, and this is why you need to buy real estate, is bonus depreciation coming
Let's take
back
a
to
phone call.
100%. Oh, yes.
I think we welcome to the show. Your name, please.
Hi, my name is Manohar.
Yeah, hi,
I,
Manohar.
I cannot hear the responses from Tony. Is there anything I can make that a little bit clearer? Very good information. So if we can make that audio a little bit better, that would be great.
Sure, we will do it. Thank you so much for the feedback. Do you have any questions for us?
Right.
Yeah, thank you.
No, I'm just listening. It is very, very, very good talk. Thank you.
Thank you so much. Yeah, yeah. We'll try to be a bit louder, Tony. Yeah, I think. Yeah, thank you so
Oh, a
much.
little bit louder? Yeah, okay. Sounds
Little bit
good.
louder, Tony. Thank
Cool.
you so much for calling. Yeah, I think. Okay. So, listeners, if you have missed this part of the segment, but all these recordings will be uploading on the YouTube. If you have not missed this, go to Nagaraj Hannaya's YouTube channel. Don't miss out all this wealth of information. It's a free, but it's a way to basically we are trying to help you to build your wealth. If you have missed it out, go to Nagaraj Hannaya's. All this recording will be uploaded. Sorry for the technical glitch what we added. Okay, but yeah, coming back to the tax things, right? Trump new things. One is the property tax related. What else we have?
Oh yeah. Let me know too if this sounds better for us too. But the
Yeah.
100% bonus depreciation coming back,
Huh?
this will be huge. Right now, you only get 40% of bonus depreciation. And what bonus depreciation is for if you don't know, is taking a chunk of all the depreciation the first year. So say if you buy a house, the whole house, the IRS thinks it's 27 and a half years useful life.
Yeah.
However, we know that the floors, the doors, the cabinets, they don't last 27 and a half years. They last a lot shorter time span. So what bonus depreciation allows you to do is take and write all of that off the first year. So right now on $1 million house, you may only get say maybe $80,000 with bonus depreciation. Once the tax laws goes back, you can probably get $200,000 off just like that. So that will write off against if you're a real estate professional, Airbnb, short-term rental, you can take that off against your W-2 income and reduce it that way. So if you're making $500,000, you'll shave off $200,000 just like this with bonus depreciation coming back. So this is massive for real estate investors.
I think I have a lot of questions on the bonus depreciation. Listeners, if you have any questions, myself, Realtor Nagaraj Hanaya, and I'm talking to Tony from the CPA dude. If you have any questions, do give us a call. Utilize this. Utilize this on the tax saving strategies. Nobody gives this wealth of information. Our studio line numbers are 877 Bali 92. If you have any questions, do give us a call. Ways and means to save your taxes. We can answer you. So coming back to the thing, right? Bonus depreciation. I think let's make it simpler to the people, a lot of unknown folks. Like let's say that if they're getting an investment properties, or if basically they're jumping on from already they have a first house and they want to jump to the second property, they need to buy the second property. Now the first property becomes investment property, right? So in that so they can basically, if they have sold it for the down payment, the stocks or something, right? Like they've sold it and they need to pay for the capital gain for it, they can offset by doing a depreciation.
Yeah, exactly. They won't have to pay capital gains on that with this using bonus depreciation.
Yeah, that's the beauty of it. Like, but you need to plan well talk to the experts so that they can guide you. A lot of people get like basically panic. Oh God, I need to be saving for my down payment. I need to pay taxes for the down payment. But they've missed out on this using as a bonus depreciation, right?
Yeah, it's massive. One example, I had one client, they bought an $800,000 house.
Mhm.
Bonus depreciation was 100,000. They got $350,000 extra from bonus depreciation on an $800,000 house. They work at Netflix, made about $500,000. So their adjusted gross income, 500 minus 350 was only $150,000 that year. They got a massive tax refund. So
Yeah,
it's very huge.
I think, see, no need to buy in South Bay. Come on, guys, you can go buy Stockton. I talked to I helped a lot of clients who bought it in Stockton, Manteca areas. They have not even bought the first house, but they already have 2, 3 investment properties in Stockton or
Yeah,
Manteca. Reason is bonus depreciation.
it's beautiful. It's almost like your down payment's free.
Yeah, no, don't even go for 600, 800K. Go for maybe a 600K condos. Go get it. Maybe use it for it, bonus depreciation. Go get rid of it. Maybe buy another 10 investment property every year.
Yeah, and all that tax. It's the other beautiful thing about rental real estate. You have money in the bank in your pocket, but you don't pay any taxes. So
Yeah.
you're cash rich, paper poor is the beauty of it. So you pay, generally speaking, you don't really pay any taxes on rental real estate.
Yeah. See, these are the tips most of them doesn't give you. I think we have a couple of more minutes, Tony. Let's wrap off with more tips or the more what are the tax related Trump we are thinking about, right? What are the other things, Tony?
Yeah, that one is the very very big one. Those two are looking great on that side. The other parts where I could see great opportunity is if corporations, their taxes go down to 15%. So if you're a seasoned real estate investor or you're a business owner,
Mhm.
switching your entity structure to a C corporation could be better than an S corporation or multi-member LLC. So it's only going to be 15% effective tax rate, unlike the current one's 21%. So this could be very huge if this one passes too. So that could be huge if you know how to play the game. The big thing about this is the opportunity is huge if you know how to play the game. People are scared on this, but I embrace the change. If you know how to capitalize on the change, you're going to win and you're going to save a ton of money to buy more real estate or just take a fancy vacation, right?
I think always coming back to we a lot of Indians play cricket, but the cricket is like you want to get it off for a duck out, or like basically you need to play a long game. But when like basically using your talent properly, that is very important. Especially real estate is also like that, and investments are like that. You need to strategize for the longer investments, and as we discussed today, use the strategy of the short-term investments and other things like bonus depreciations, which makes a difference when you're doing it. And I always encourage Tony, like when they're buying a second property, I tell to my clients, don't sell your first property. Keep the first property because this is the ways they can help to strategize in the taxes.
Yeah, yeah, you always keep it. And then also, you have the first property, you have HELOC. That
Yeah,
interest you take out on a home equity line of credit, it's all a tax write-off. So even if it's say 7% effective after taxes, maybe only 5.5, 6%. So because you get a write-off on the interest, it makes it cheaper too. So that first property that you have your primary residence, I feel like that's the gateway drug to getting into real estate. It's the safe bet already.
I think you said well said. Real estate is a drug. Only people enjoys it. They always keep on building their wealth. If they don't get that dosage properly, they never buy real estate from after 10, 12 years also. Listeners, thank you so much for listening. Tony, if somebody wants to reach out to you, what's the best way to reach out to you?
Yeah, the best way, just check our website, thecpadude.com.
Yeah.
Also, our Instagram is the CPA Dude. And then also you can also text us too, 254 CPA Dude. That's 254 CPA Dude. But if you forget it all, our website's the best at thecpadude.com.
And if you forget to reach out me, don't forget, like go to nagrajhomes.com, click on the WhatsApp icon. That's the easiest way to reach out if you want to build your wealth on through a real estate. Any questions on the real estate, the first and last stop should be Nagraj Annaya, where you can give you wealth of information on the real estate. Thank you so much for listening. And all these recordings will be uploaded in a YouTube channel. Sorry if there was some audio issues, but all these recordings will be uploaded in YouTube channel. And don't forget to subscribe to your own Nagraj Annai on the YouTube channel. Thank you so much, Tony, and thank you so much, everyone. Thank you.
Thank you.